Hello and welcome into commodity culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day, and today I'm joined by Mario Innecco, the host of the Innecco 64 YouTube channel, the home of alternative economics and contrarian views. We're going to be focusing on gold and silver today, with a special attention being paid to the manipulation of both markets through paper contracts and whether that game is nearing its end. We will also, of course, be discussing the BRICS Summit that is happening right now as you're watching this, and if a gold-backed or commodities-backed currency is going to be introduced. The final days of the fiat currency system. Is it underway right now? And much more. So without further ado, here is my conversation with Mario Innecco. So last time I had you on the show back in January of this year, we really focused that interview on discussing manipulation of the gold and silver markets in depth. But for those tuning in, because I've had a lot of questions about it since then, for those tuning in for the first time and to provide a bit of a recap, could you give us a summary of who is manipulating the precious metals markets and how they are doing it?
Well, it's basically the U.S. Treasury, the Federal Reserve, the Bank of England, and they probably do it through the BIS because the BIS is the banker for the central banks, and they can hide behind the fact that the BIS is a supranational entity. So they're not answerable to anyone. So that's how it works out. But the reason they do it is, and I've learned this through the years, is that they don't want the general public to be involved in buying real physical gold and silver. So, and I could see that there was some kind of manipulation of the price when I first started buying gold in 2002. And I worked in the financial sector, and I was watching the markets every day. I'd never seen a price do the same thing every day at the same time. And I thought, this is strange. But over the years, I learned that, for example, in 1974, thanks to WikiLeaks, there was some correspondence going on between U.S. Treasury and the State Department and the bullion dealers in London. And why was that? Well, because from 1st of January 1975, Americans were going to be allowed to own gold again for the first time since 1933, when FDR made it illegal. And they were concerned, the authorities in the U.S., because they didn't want people leaving the Federal Reserve note or the fiat dollar and going into physical gold, because that was the original reason why Roosevelt made it illegal. So in that WikiLeaks document and correspondence, it states really clearly that the dealers in London thought that starting a futures market on the 31st of December 1974 would be really good, because it would keep gold like a commodity and very speculative, and it would put Americans off from buying physical gold. That the futures market on COMEX would dwarf the physical market. And I think that's what it's all about, because if they were really good at manipulating and suppressing the price, we wouldn't be at 2,700 like we are today. We'd still be at 35. But I think the point of the suppression and manipulation is to put the public off. When you speak to the average person, or even let's say financial advisors, they say that gold is too risky and it is a commodity, and that's what they want, because they don't want you jumping ship from their fiat currency system. And why have they been so successful, in my opinion? Well, because they've been able to keep people borrowing and keep them in the system. And it's a club. It's only the major central banks in the West that have this mechanism. But now I think their game is almost up because we see China and others, they're buying real gold, and their markets are growing, and they're going to compete with COMEX and the LBMA in London. So that's in a nutshell, really what the manipulation is about. And I think, there are comments from central bankers like Paul Volcker, the late Paul Volcker, said that gold was his enemy. And we saw a bullion dealer from London from the 70s come out a couple of years ago. I think it was Peter Hambro from a really respected banking family. He said it was manipulated, and that the paper markets are way leveraged. They don't really trade real gold and silver. And that's basically what they do it to keep the public from realizing how useful gold is to protect your savings.
Hey guys, just a quick break to hear from today's sponsor, ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. That's a fantastic summary. And as we sit here today, 10 months after our last interview, has anything significant changed in terms of manipulation of the gold and silver markets? You mentioned you think it's coming to an end. Maybe you could discuss how you see that playing out. And for better or for worse, have you seen any other changes when it comes to manipulation of those markets?
Yeah, I think it's getting harder and harder for the bullion banks and the New York, London axis to manipulate the price, because there's been a lot of physical buying from the global south since 2022. I think the other factor is that even the people in charge, like I think it was the World Bank or the IMF, they published a paper early last year saying that, asking the question, sorry, it was the IMF asking the question, so gold is no more a barbarous relic, and that it should be used as reserves. And we've seen also Basel III making gold an asset that you can hold, that banks can hold in order to calculate their the equity on their tier one assets, to make sure that they are a tier one capital bank. They can use gold, physical gold, they said, not unallocated. And unallocated is the way that they leverage the market. And they do it a lot through London. People don't realize, through the LBMA, because there's no limit to how much you can leverage or hypothecate in London. And I think it was David Jensen. I've had him on my channel, and he said that the LBMA, there's no rules really for the bullion banks. It's like a cowboy, old West kind of environment. But on COMEX, there is a limit. There's a margin. It's usually, I think, about 20-1. So you can't leverage any more than that. So yeah, that's how I think it's changing, because people in other parts of the world, like Russia, China, they know about this, and they know that it's the Achilles heel of the dollar system, and they're loading up on physical gold. And the Chinese, they've started exchanges like the Commodities Exchange and the Shanghai Gold Exchange. And those are a lot more physical markets. And other countries as well. I think India, Moscow even, they've started a bullion market. And these people Yeah, in these countries, gold is not seen as speculative as in the West, as it's been for the last 50 years. So that's why I think it's getting harder and harder. And I think just a day or two ago, even Bank of America now, one of the big Wall Street banks, is saying that gold is the safe haven of last resort. It's better than even Treasury. So what they need to do now, I guess, the bullion banks is they'll probably end up going long all the the futures market. They'll have to cover and then go long gold. So when gold really takes off, they'll probably benefit as well, though.
Well, let's discuss the BRICS Summit. You mentioned Russia and China there and how they've been accumulating gold. The BRICS Summit is coming up October 22nd to 24th. This episode will be released on October 23rd, right in the middle of it. So I'm wondering what the importance of that summit is in terms of potentially introducing some sort of new currency, whether that is for trade amongst member nations or otherwise when it comes to the BRICS. There's been some images circulating on social media of a BRICS Pay card that's going to be given to people there, fueling some speculation that perhaps this is going to be part of the new currency system that they announce. What are your thoughts on the summit and its importance? And obviously, predictions are a mug's game, but what are your thoughts on the potential for a gold-backed currency getting introduced?
Well, first of all, I think the importance of the summit is more to do with the fact that the rest of the world is jumping ship from the Western monetary system because they've seen how the United States, the UK, and the EU can basically steal your reserves like they've done with Russia. And even before that, the sanctions are everywhere. So the fact that there's I think over 40 guest countries going to the BRICS Summit is really important as well. As for BRICS reserve currency, I think that's far and far away, and I'm not even sure that's what they're looking for. You just look at the euro, the single currency that took decades to create, and countries went through a lot of trouble. The UK included. UK was trying to be part of this European Monetary Union, and we had the events of September 1992 when George Soros smashed the pound. So I don't think BRICS are going for a single currency. What they want to do is set up some kind of monetary and trade mechanism where countries trade with each other in their own fiat currencies, but at the same time have gold reserves of around 40% of their foreign exchange reserves. So it's not really a gold-backed system. It's kind of gold-backed, but I would say in an ideal world of sound money, and unfortunately I don't expect the BRICS to go that way, you would have just gold. You'd have a gold coin from China of certain denomination. That would be, let's say, 1,000 yuan, and then a gold coin from Russia, and that would be it. But this is different. This is just trying to circumvent the fiat dollar. So I think it's going to be like just an alternative to the dollar. But be as it may, they're going to demand. The demand for gold is going to stay very strong because I think a lot of these countries don't have 40%. I think Russia is up to 31%. And the most important thing, and the reason I've been covering it, is not to hype up gold, but to just point to people that it's going to create a lot less demand for dollars, for treasuries, for European government bonds, UK government bonds. And what that will mean is it's going to mean higher interest rates for us. And the fact that we are up to here in debt, it's going to make it even worse. That's the whole impact of this BRICS monetary architecture. As far as them having a single currency, I think it's still a very long way away from that. But I think they want to make it based more on commodity money. And I think that's a good thing by having 40% in gold. And I think they realize that the West, especially Russia and Putin, I think 2.5 years ago, he said that the dollar and financial system of the West is based on mythical values. He understands all the leverage and the financialization. So that, in my opinion, is the importance of this BRICS mechanism. Um, Whether it will work, I'm not sure, but it will definitely be a challenge to us in the West.
Yeah, that's a very logical approach to it because we're hearing a lot of, we could say, hyperbolic language around the BRICS summit and the fact that the US dollar's days are numbered. I think it's obviously a much longer process. So I'm wondering what your thoughts are on anything replacing or perhaps running alongside the US dollar as a reserve currency. Do you see this as a slow development that's going to take place over decades? Do you see there being potentially other currencies that could not necessarily rival, but perhaps run alongside the US dollar as another option? And is this BRICS payment system or the idea of trading in their own fiat currencies, could that eventually grow into a point where it can at least run alongside the US dollar in an equal measure?
Yeah, I think the US dollar, yes, will still be around, of course, because countries will want to deal with the US dollar. I think the most important thing is like using treasuries or treasury bills as reserves. I think that's going to decrease. And if I'm not mistaken, I think China, or it could be the BRICS, uh, or I think it's China, they're using, yeah, only like 30% of their trade is going through the dollar and the euro now. So I think it could happen fairly quickly. And I think it's one of the reasons why the Fed has been reluctant to cut rates as aggressively as the market had forecast, like at the end of 2022. Yes, they cut recently, but if you remember well, in 2022, they're forecasting cuts already in the beginning of this year, end of 2023, excuse me. So, yeah, I think the countries whose economies do the best and produce the most and sell the most, their currencies will, of course, do well and be used as reserves on that 60% of the BRICS mechanism. Of course, gold will be part of it, and who knows, maybe the United States and the UK and other Western countries, the EU countries, Eurozone, they'll have to start focusing on gold and raising their reserves of gold. And yeah, so I think that's where it's going to come from. The challenge, it's going to be um, what do you hold as reserves? And the most reliable asset, in my opinion, that's apolitical, holds its value, and is really stable and has been stable for thousands of years is gold. So who knows? We might even have some countries holding more than 40% in gold reserves. But the dollar, yeah, it's not going to go away. It's just its importance is going to be less, and the U.S. Will have, yeah, that will be a big dent on U.S. power, because up until recently they could just print and borrow and buy anything from anywhere. They didn't have to earn, let's say, Brazilian reais, or they didn't have to earn South African rand or any other currency when they're looking to buy things abroad. They can just do it with their own currency, and I think that's what's going to change. But some people will also want to buy things from the US, so they'll have to have dollars as well. So it's just like the pound, pound sterling in the UK. It's still one of the top five, I think, reserve currencies. And it lost, of course, the major reserve currency status Actually, it was 1954. Some people think it was after World War One, but the dollar only surpassed the pound in 1954 as the major reserve currency.
I want to talk about the election coming up in the US, and specifically if Trump comes into power, he's talking about pushing back against countries who want to move outside of the US dollar for trade. He's talking about, I believe, putting 100% tariffs on these countries. He's throwing these tariff numbers out there, and you did a video on your channel about how you think that will backfire and deal a blow to the dollar as a reserve currency. As one counterpoint, I recently saw an interview with Arthur Laffer, a former member of Reagan's Economic Policy Advisory Board. He was interviewed on ITM Trading, and he said, look, guys, you don't take Trump literally. He's just threatening to implement tariffs to bring people to the negotiating table. So first, I'd like your thoughts on why you think these tariffs would backfire. And what is your response to Dr. Laffer, who says this is just kind of Trump's method of negotiating?
Well, I'll start with the Laffer comment. I think he could be right. I mean, maybe Trump is starting at 100, maybe, and he'll get like 30 or 20. So it could be a negotiation. The reason why I think it would backfire if it were 100 is that it will act just like a sanction. And I think a lot of times Americans tend to forget that we're not back in the 1950s and 60s when the U.S. economy was the biggest economy in the world. The U.S. was the biggest creditor nation. Things made in the USA were quality things. That's changed, and the world is, for better or for worse, growing outside the U.S. and Europe. So I think countries that might be threatened, they could say, fine, we don't want your dollars. We'll just sell our wares to other countries that are growing and need it. I mean, technology is not just something that the Americans have mastered. I think a lot of other countries are doing well in terms of the tech sector, but it's not just the tech sector, of course. So that's why I think it would backfire. I think trying to keep the dollar as the major reserve currency just because, as Trump said, they need to salute our dollar, I think is really jingoistic, and it's doesn't make sense. I think what America needs is to live more within their means, and I think the dollar is still artificially too strong, and that's why the U.S. Industrial base is getting hollowed out, and a lot of jobs have gone abroad. Maybe they should look into the WTO agreement from about 25 years ago that put China into the WTO. Ever since then, we've seen a lot of jobs leave, not just the US, but Europe and the UK. Maybe, yeah, be a little more diplomatic, I would say. But of course, Trump, I think he looks at the US as still a major power. And I'm not saying the US isn't a major power, but the other thing that about the election that I see is that none of the two candidates have touched upon the debt and deficit situation, and I think foreigners they can see the writing on the wall. There's no control in Congress in terms of spending, and I don't think much will change. Whoever is elected.
Yeah, absolutely. That is a very fascinating breakdown, and there's a lot of different rhetoric coming from both sides. Kamala Harris talking about price controls, handing out money to people, but at the end of the day, the ballooning debt and deficits are not going to be brought under control by either party. You're in the UK, so I wanted to ask you your thoughts with boots on the ground there on what seems to be, we're seeing this all over social media, a crackdown on free speech. We're seeing posts that the UK government and the police are starting to jail people for social media posts. we're seeing a video of a police commissioner talking about arresting people outside of the UK and extraditing them to put them in prison, which is just completely insane. How much of that is just being blown up on social media and taken out of hand? Or is this a serious threat to free speech that you're actually seeing in the UK right now?
Well, it was back in the summer when we had those riots triggered by the Southport incident. And yes, they did crack down on people on social media. And even before that, in the last few years, I've seen someone say that a lot more people are like reprimanded or arrested for social media posts in the UK than in Russia. So it's nothing new, but I think people are waking up here in the UK, and you just have to be careful what you comment on social media. And make sure that you check the sources. Like you said earlier today, there's this post going on about a BRICS pay. I think it's a little too good to be true, that thing. So until I know who's behind BRICS pay, that new card that you talked about, I'm gonna not really publicize it that much because I don't know. So that's just like an example of what I say. I'm not saying they're going to arrest you for that. I'm just saying that you got to be careful that you know the source of information. But yeah, I think it's not just here in the UK though that they're going after free speech. It's everywhere in the West, and the reason why it's happening is because it's all got to do with the money, Jesse. And if you study monetary history, you look back in the 1790s France, when the economy was down in the dumps, when they're trying to pump the system up with the assignats, which was paper money. They had their reign of terror. They tried to control prices, and if you didn't, they arrested you and chopped your head off in the guillotine. So it's a symptom of the falling fiat currency system, and you just got to be careful. You can't, be careful what you say. And some people might say, "Oh, you were against free speech," but sometimes it's better to stay alive or free and try to wake people up in a different way. And I try to do that through the monetary system, because if you're able to remain self-reliant and not dependent on government, I think it's 1 foot outside this system that they're trying to impose on us.
Absolutely. I want to talk about the gold market here. We've obviously discussed some of the different catalysts that you see potentially driving the gold price. I'm wondering if you could just, a broad question, take it wherever you'd like. How are you currently viewing the gold markets? What are some other catalysts and drivers that you think could take the price higher? Do you think we're still in the early stages of a precious metals bull market at this point?
Yeah, I definitely think so. The break of 2100 earlier this year, that confirmed the next leg up, because up until last year and beginning of this year, we couldn't get back above 2000. I think in February we still tested below 2000, and that was very near the top from 2011 at 1920. So we had to really make a new clear high to confirm the next leg ups. And that's why I think we're still in the early days. We still got a few years left. I'm not sure if it's 3, 4, 5, or 6 in the gold bull market. And the main driver, of course, is inflation. And by inflation, I don't mean the CPI, but I mean the fact that central banks are going to have to cut again and probably do QE again. and it means the simple law of supply and demand. Gold is very hard to get out of the ground. Yes, there all the gold that's been mined still above ground, but people are not going to part with their gold when they see what's going on. The other driver, I would say, that is probably going to help the gold bull market is the fact that we could see uh, people from other sectors, people who don't watch gold, look at it and say, "Wow, gold's doing really well," and the Nasdaq, S&P, and Dow, they've done so well. Let's take some profit here and shift our capital towards the precious metals and commodities. So I think that could be a driver, and I think family offices, which are companies that manage money for very wealthy families, they still have a very low kind of percentage holding for gold, silver, or precious metals. That's like 1 or 2% of their assets. So could you imagine people finally realize, wow, gold is doing really well. We need to put a little bit of money into that, and just putting another percent of all their wealth in there could make a huge difference. And the other driver, I think, is coming up soon here. Is People are going to realize that the mining companies in the last 3 or 4 months, they've done really well because the price of gold has stayed so high. So their profit margins have gone up a lot. And yes, we've got some results coming up, I think on the 23rd, which is when this video is going to be published from Newmont, and then in November from Barrick. And that could drive a lot more investors into the mining sector as well, in gold and silver.
Yeah, and gold above $2,700 as we speak, performing very strongly. Silver right now above 32. A lot of people are pointing to silver staying over 30 and not being tamped down or brought down by the manipulators is kind of a good sign that it's showing strength and that the manipulation of the silver markets is starting to break. I wonder what your thoughts are there, and how you see the future outlook for silver, because look, it's doing very well, but I think it's kind of gotten back to the level it was at in 2013. So people have been holding since back then have just broken even. So I'm wondering what your thoughts are there.
Yeah, and I think the gold silver ratio is around 84, maybe a little higher, which is really historically very high. So gold, I mean, silver has been able to stay above 30, which is a start, but I still think it's a little bit frustrating right now that it's still at 32 while gold is at 2,700. Uh, and it wasn't just in 2011 that we went to 50. It was in 1980 we almost hit 50. So what I the way I see silver, and there's a lot of physical demand for silver for industrial use, countries like China and India, and I think that's going to continue. Um, I think what will happen to the silver price, but problem is I don't know when. We could be close. Is that once it breaks key levels on the upside, and I'm talking about here 30, 33 maybe, we could see silver move up really quickly. It's not like it's going to keep uh, going up slowly like it has in the last few years, because maybe people are going to say, oh, we'll get to 40 by the end of 2025. No, I think once silver breaks out, it's going to go up really quickly. I don't know where it's going to go. Probably test the 50 level, and it could be faster than most people expect. And I'm patient with silver, and I have real silver, but I also have some of the silver miners. And silver is like some people call it gold on steroids. And usually in the precious metals bull market, silver usually leads the way. So I think it's only a matter of time till it catches up. And I think it did the same thing back in the early 2000s. Gold was started to go up quite nicely. Like in 2004, it broke above 400, which was a key level. And silver only really started moving higher in '05, maybe '06. So I think 2025 could be a good year for silver, if not even the rest of 2024.
Well, Mario, this has been a fantastic conversation as always. Tell us about the Innecco 64 YouTube channel and what it is you do there.
Yeah, I started the channel in late 2015, and what I do there is I try to talk to the general public like I used to talk to my institutional clients in the financial sector, to try to explain to them, how the system works. And also, I lean towards sound money, free markets, small government, which is tied up to like the Austrian School of Economics. I got involved in the Austrian school and read into it back in the early 2000s. I even met Ron Paul in 2002. And I still think that's the right way forward, even though it feels right now that, the world's going the other way. So my channel, Innecco 64, it's the home of alternative economics and contrarian views. And I post a video there, virtually every day. And I do a live stream on Sunday night, London time. And I'm also on X at Innecco 1964.
Great. Well, I'll put a link to the YouTube channel as well as your X profile so people can follow you there. Thank you once again, Mario, for coming on. It's been a blast.
You're welcome, and thank you for having me.
And thank you for joining us today. This episode was brought to you by ARC Silver Gold Osmium for all your precious metals needs. Head to arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys on the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.